All right, it's time for the 3 big things you need to know. Let's get started on this thing right away. All right, we're going to have 3 things to talk about. Number 1 is Fannie Mae changes. Number 2 is VA changes. Number 3 are changes in FHA. All of these can affect you. Some positive, some not so positive. Let's talk about Fannie Mae first. Fannie Mae, conventional loans, that means anything conventional, which would be a Fannie Mae or Freddie Mac under those guidelines is going to fall under this category. Now, here's the deal. They make changes in the algorithms that are used to underwrite files. Lenders use DU for Fannie Mae or LP for Freddie Mac. Now, that may seem a little esoteric, and it's not really important to you. But when a lender is approving a loan, they put in the client's data completely, including credit score, the type of property, the amount they're putting down, everything. And Fannie Mae, when it approves the loan, then when you go to price it, it puts adjustments on it based on risk factor. So obviously, a client that's got a 710 credit score is not going to get the same interest rate as a client that's got an 810 credit score. And they shouldn't, and they don't. But they're making a lot of pricing adjustments. Now, I had a client just the other day. They were scheduled to close early April. Actually, the last day of March, to be honest with you. And I priced it out. And then I just happened to look at what would the pricing be in the future. Saved him 1 point, a whole point, which saved him over $3,000. But if I wouldn't have looked at that, I couldn't have given him that. And if the seller wasn't negotiable and was willing to extend the closing date till April 17th, I wouldn't have been able to save him the money. But I was able to take a 30-day lock for today, extend it to a 60-day lock, which is normally more expensive, and saved him a full point. It's pretty incredible. If that's something you're looking for from your lender and you're not getting it, you call me. I'll be happy to help you. Number 2, VA, making changes to their funding fee, and they reduce the funding fee for a veteran. Thank you, VA. You're so kind. Well, I don't like looking a gift horse in the mouth. There's a Freudian slip for you. But they only reduced it by 15 basis points. So normally the VA funding fee currently right now for a first-time user for their VA would be 2.3. They reduced it to 2.15. And for a subsequent user from 3.6 to 3.3. So small improvements, but an improvement nonetheless. Thank you, VA, for that. Appreciate it very much. I would have hoped that they would have given it a considerably better reduction. Third thing is FHA, HUD. HUD came back and said, you know what? We're trying to help more underprivileged people that struggle to get conventional loans, people that may not have the credit scores, maybe people that, just don't have a lot of cash. Their loan to value, they want to go higher to put less money down, and their debt ratio might be, exceeding what conventional will allow. Well, they're reducing the MIP on the monthly. There's 2 forms of MIP on an FHA loan: upfront, which is 1.75, and then monthly, which is currently 0.85. Well, come March 20th, FHA now will reduce that by 30 basis points. So they're going from 0.85 to 0.3, and that's a really nice, 0.55. I apologize, from 0.85 to 0.55, which on a $250,000 loan will save you about $62 a month. On a $300,000 FHA loan, it's going to save you about $75 a month, which equates to about between a $750 and $900 savings on your average FHA. So not chopped liver. Thank you very much, HUD, for that. I think we're going in the right direction. Now, if we can reduce the upfront, it's even going to be better. And if they would eliminate the lifetime mortgage insurance, I would love you, HUD. But they're not calling on me to make the rules, but I have to give them to you. Those are the 3 big things you need to know. Have a great weekend.